I'm V, your host. Welcome back to the show, where we break down the world's superpower companies. Today, Tesla just lost its crown. Not in style, not on price, on profit, on revenue, on volume. All three in 1 year to one company most Americans can't even buy. My friend is here today to ask some tough questions. Let's go.
With BYD, which is also on the West Coast. I think they're ramping up production of their electric vehicles. Warren Buffett owns 10% stake in that. Why do you laugh? BYD is trying to compete. Why do you laugh?
Have you seen their car?
I have seen their car, yes.
V, let's start at the top. BYD is the world's biggest EV maker. They just outpaced Tesla. So why can't I walk into a dealership in Ohio and buy one?
Honestly, one word. Tariffs. The US slaps 100% tariff on every Chinese-made car, so a $10,000 BYD turns into a $20,000 BYD overnight. Then you add union pressure, security reviews, dealer politics. The math just doesn't work. But here's the framing nobody tells you. BYD isn't blocked because the cars are bad. They're blocked because Detroit can't compete. Same playbook the US ran on Japan in the 80s. Tariff first, talk later. Difference is, Japan eventually got invited to build factories in Kentucky. BYD probably won't get that invite, at least not yet.
Every headline I see says BYD beat Tesla. V, is that actually real? Or is this Chinese propaganda we shouldn't trust?
Verified, totally real. Both companies just released their numbers. BYD's 2025 revenue, $116 billion. Tesla's, $95 billion. BYD beat them by $21 billion. And here's the part nobody saw coming. BYD's profit, $4.7 billion. Tesla's, $3.8 billion. First time ever. The kicker? Tesla's profit dropped 46% in 1 year. BYD's only dropped 19%, and that was during a brutal Chinese price war. The factory beat the brand. And we'll come back to the valuation gap in a minute, because that's where this gets really weird.
Charging V, BYD's saying they're twice as fast as Tesla. Real or marketing?
Real and kind of insane. BYD launched their new platform last March, 1,000 kilowatts of charging power. That gives you 249 miles of range in 5 minutes. Tesla SV4 supercharger, 500 kilowatts, half the speed, 115 miles in 5 minutes. But here's the catch. BYD only has 4,000 stations, most of them in China. Tesla has 70,000 worldwide. So, in China, BYD wins. Cross-country road trip in America, Tesla still wins by default.
Okay, V, the question every investor is asking. Is Tesla actually a bad buy at this price? Or is the market right?
Not bad, just way overpriced. Look at the math. Tesla's stock value, $1.5 trillion. BYD's, $130 billion. That's 11 times bigger for a company that BYD just out-earned in the same year. Tesla trades at 358 times earnings, BYD at 20. Make it make sense, right? You're not buying Tesla's cars. You are buying the Robotaxi dream, the Optimus humanoid bet, the AI play. Bull case, if Tesla ships full self-driving by 2027, the stock's a steal. Bear case, if the new chip slips again, if Robotaxi pilots stay tiny, you are holding the bag. That's the trade. Pick your conviction.
All right, V, can Tesla still catch BYD, or is the race over?
On selling cars? No. BYD sold 4.6 million vehicles last year. Tesla sold 1.6. That's not a gap you close. BYD dominates 9 markets globally. Tesla dominates 6, mostly North America and Australia. BYD has factories live in Hungary, Brazil, Thailand. Tesla's still in the US, China, and Berlin. The volume race is over. Tesla's new lane is autonomy and AI. That's not a worse lane, just a different one.
Self-driving V, people say BYD is way behind on autonomy. Is that true?
Both are at level 2. Neither is fully autonomous. Tesla's got about 30 robotaxis driving in 3 Texas cities. BYD's working with DeepSeek AI on their God's Eye system. But here's what people miss. Neither one got China's first level 3 certification. That went to Chang'an and BAIC in December. And Tesla's unsupervised FSD has been pushed to Q4 of 2026. Their new AI chip delayed to mid-2027. The finish line is still ahead for both of them.
Pull the lens back, V. How does the BYD versus Tesla story fit China's bigger dominance picture?
EVs are the front line, but energy is the real war. China makes 80% of the world's solar panels. The US makes less than 2%. Last year alone, China added 174 gigawatt hours of battery storage, 3 times all of North America combined. And then there's this, the Great Solar Wall in the Kabuki Desert. 100 gigawatts of capacity, 250 miles long, 3 miles wide. Enough to power Beijing. BYD isn't just a car company. They're a battery company that happens to make cars. That's why this story matters way beyond Tesla.
For everyday Americans, V, what does this actually mean? Day to day, wallet to wallet?
You get cheap solar. 80% price drop over the last decade. Cheaper rooftop, lower electric bills. That's the good news. The bad? American manufacturing jobs are gone. National security risk on critical infrastructure. 60% tariffs raise your installed solar cost by 60%. So you get the technology at a markup. You don't get the factories. You don't get the lead.
Bottom line, V, 1 minute. Wrap it up for us.
BYD 1, 2025. Bigger revenue, bigger profit, bigger market share. Tesla's betting on 2027. Autonomy, AI, humanoid robots. Both can be right. If you're a driver outside the US, BYD wins on price and tech. Inside the US, Tesla wins by default. If you're an investor, Tesla's a story bet. BYD's a fundamentals bet. If you're an American, you're paying tariff prices for Chinese tech. That's the trade your government chose.
V, sharp as always. Comments below. Tesla or BYD? Drop your pick, tell us why. Subscribe for the next episode, hit the bell, hit the like. See you in the next one.